Hey, what's good, everybody? Welcome to another edition of ALGO'S Take. I am your host, Mr. Algo Bailey. For those that haven't already, make sure you guys subscribe to us. Push that subscribe button on his YouTube. We definitely want to get more of this content out. Today, we're going to be going over the last moving average you will ever need, aka the 36 HMA. HMA stands for whole moving average. This moving average is actually introduced to me by one of our members, and somebody that's like really near and dear to me in our community. You know who you are. Thank you for this, because I've used it in my trading ever since. Before we get started, guys, got to make sure to drop the plug right now. Right, we want you guys to come snipe with us. Optionsnipers.com is where you can find us. Also, you can find me on Twitter at salutesir with double I's. Right now, I do have 50% off my one-on-one sessions for non-trading advice, but technical analysis ideas, kind of trade logic. We just talk through our opinions, really. But you can find me at optionsnipers.com. Go to book a class, look for all things ALGO'S all things trading. You'll already see the 50% off discount applied at checkout. Also, don't forget to join us on Instagram at Option Snipers, and subscribe to our Options Trading Academy, where you get access to our Discord, where stuff like this happens quite often that you see in the middle of our screen. Chances are you see green numbers with thousands of dollars. That's all we're here to do is make sure that account is green, healthy, with thousands of dollars. And we do that through these trade ideas and things like that. But I want to dive into our content for the day. Happy 4th of July, by the way. You guys see what I'm doing on 4th of July. We're working. So we're going to talk through what a moving average is. Before we can go into the significance of the whole moving average, you just have to understand the moving average as a whole. See what I did there? So the moving average is a simple technical analysis tool. It smooths out the price data by creating a constantly updated average price. The average is taken over a specific period of time or ticks. You can do days, minutes, weeks, right? It really just depends on what time frame you're looking at. And the moving average automatically adjusts to the specified amount of time that you want it to look at. A moving average can be used as both support and resistance, depending on the trend. So let's just do a little dive into a moving average. So here I have SPX on the 1 minute. Actually, let's move to a different chart. Let's move to the daily chart. Let's just move to a max 1 day chart. All right, and all we're going to do is apply a moving average. So I'm going to go to my studies, and let's apply, let's say, our 200 moving average. So we're going to show that study real quick. Yes, this might be redundant for people that already know what moving averages are, but for the ones that don't, we're just going to look at the moving average and how price action can work as both, support in this regard, or resistance as well, just by looking at the SPY daily chart, right? So you'll see that it has two reactions to this 50 moving average. It either bounces on it and continues the current trend, or it falls below it and, either corrects or retraces. So, having an understanding of what moving averages can tell you about the price, about where it is, about where it could go, is really important. Understanding that these moving averages can be used as both support and resistance really matter. And they can help you in your trading. I know ever since these were introduced to me, it's definitely helped me. So now we're going to talk through the whole moving average. Okay. This was made by a guy named Alan Hull. And really what he wanted to do, or what he noticed, is that the moving average, both exponential and simple, tend to have a little bit of a lag, and they don't follow price action as cleanly. So he put this, crazy algorithm together that uses square roots actually to follow price action, in that line that the moving average would form, a lot cleaner, and really be able to react to the price action without as much of a lag. So the whole moving average can be interpreted in a similar way to regular moving averages, but it just responds way more quickly. It can be used to confirm a trend or to spot a change in the trend. HMAs with shorter periods are often used to identify entry points. All right, so so when the overall trend is up and the HMA turns up, this is a signal to buy. Right. Conversely, when the overall trend is down and the HMA turns down, this is a signal to short. Alan Hole doesn't recommend using crossovers with HMAs. Instead, he recommends looking at turning points to identify entries and exits. If the HMA is rising, the overall trend is up. If the HMA is falling, the overall trend is down, right? So HMA uses a couple things, but it tells you so much in the price action that it can't be ignored. So we're just going to look at what the difference of the HMA is to just having maybe a raw chart, right? So you'll see on our raw chart, yes, we could look at price action to tell us what's going on. Yes, it could give us an advantage just by, right? We got a shooting star, right here, right? So which could tell us more downtrend, right? But then we have a hammer here. It's telling us, no, it could go up, but then it keeps going down. Right. As it's going up, right. We will just as you notice, looking at a chart bear or even with the moving average we had on there didn't really give us, great responses. Right. So then we'll look at this chart right here and we'll see how the HMA 36 HMA plays. So this is a chart with the 36 HMA applied to it. First of all, you'll notice that the color of your HMA changes based on the trend, right? This is really advantageous because as human beings, sometimes we need visual stimulus to tell us what's going on. And I love the way that Alan Hole designed this HMA because it allows us to see a change in the stimulus, right? It goes from one color to another color, hinting that the trend might be changing. This is it's just such an awesome indicator. It can't be ignored. It can be used for entry and exit. It can be used with supply and demand if that's what kind of trading you do. It can be used with chart patterns as well to identify potential breakouts and even reversals. So what we're going to do now is we're just going to go into each of these 4 topics using the 36 HMA. So the first thing we got to do is bring up our Thinkorswim. Now, remember, Alan Hole mentioned that you don't want to use the 36 HMA by itself. And, you want to use other indicators to, help yourself decipher what the HMA is telling you, right? So it's really important to have those set up for yourself. For me, that's the 50 moving average. So we are going to leave this 50 moving average in here. It's going to be our red line. And we're going to make it a little bit bigger width. We're going to bring it to 3. Okay, because to me, this is, for SPX, this is the trend indicator. When things are above the 50, buyers are in control. When things are below the 50, sellers are in control. And this is why I love moving averages, because if I can develop a relationship with the moving average, if I can see the relationship that the ticker has developed with the moving average, then that just makes, that just gives me an ultimate advantage. Right. So you'll see here as we're looking through SPX and, I like to just look back and let you guys just see. All right. Every time we were in an uptrend that was in question. Well, when did it get questionable? It got questionable under the 50. All right. When it was above the 50, uptrend was still going. You can back test this yourself, but I love the 50 moving average just as an indicator to tell me whose favor the trend is in. Next up, what we're going to bring on to here is our, and I'm sorry, this is 200. Wow. I'm like, why is it so far away? So we're going to make this a 50. And then we're going to look back on everything I just said. Okay. All right. So when the 50 moving average, right, and it'll still show you when price action is above the 50 moving average, it's definitely in bullish trend, bullish momentum. Below the 50 moving average, bearish trend, bearish momentum. I now have to re-scroll everything, but hopefully you guys can see the relationship here with this 50 and why I like it so much. And this is just through just tons of back testing on the 50 moving average and how price action on SPX has responded to it. Right, you'll notice as we got out of our COVID lows right here, started to move into more recovery mode. Right, you see how the 50 moving average has been a very big, possible indicator that you're moving in the right direction. Okay, so now we're gonna ask, okay, how does the 36 come into play? You're talking about the 200 on accident, and then the 50, and now we're talking about the 36 that we're gonna add. We're gonna talk about the 36 for now, and we're just gonna focus on entry and exit points for the 36. Okay, so I'm gonna bring up my studies, and I'm gonna add my 36. Now, I like my 36 to have a displacement of -1, so it plots in the future. Don't ask why. It's just one of those things. I want to see price action where it's trending a little bit ahead of where it is now. So I put that displacement of -1 on it. And so this is our whole moving average, 36 length, -1 on the displacement. We're going to show that study. All right, cool. So now we're going to, let me zoom in on just this price action right here. Right. And let's see, I want you guys to see how the 36 HMA, how it, especially with the -1 displacement, kind of how it works. So you'll notice that anytime price action is above the 36 HMA or riding on it, especially with the 36 firing your bullish color, for me, that's blue, right? You'll see the trend is upward. When the trend is in question is when the 36, when price action is below the 36 HMA, right? You'll notice the color change. And this was during our COVID lows. Actually, is this our COVID lows? Oh no, this is 2000. Oh, this is a dip of 2018. Okay, cool. All right, so we're looking at SPX on the daily, right? And we'll see that, once the HMA turned purple, we had massive selling pressure, right? Turned green again as buyers tried to retrace, couldn't quite get it, above the previous resistance. What happened? Turned purple again, created a lower high, right? Turned purple again. So I love the fact that this moving average gives me more stimulus, right? It gives me more, with the color change, it works awesomely. Also, you'll notice that when the HMA turned purple and it was below the 50, look what happened. HMA turned purple, got below the 50. HMA turned purple, right? Got below the 50. All right, and now we're entering more of a bullish move, as the years go by, I guess we'll say. We're now moving into 2020, and you'll see the same thing. Right here, defended on the 50, right, retrace back up, and, would have been heading to higher highs if it wasn't for a specific, virus. But let's see what happened, right? HMA turned purple, lost the 50, eek, boom, right? Tried to retrace, or started the retracement process, and you can tell it started retracing because what happened? Look what happened to the color. Retook the 50, right? So you can see how this HMA is amazing with SPX, especially if you do more long-term trading, right? I can take a color change on the 50 long and pretty much be able to hold it for the most part into the 36 and beyond until it retraces to the 50 again. And so, this moving average is it's just been super amazing. I mean, let's look at the price action as of recent. Just to give ourselves a little bit more, indication of how this works. And this was really the first test of the HMA 36 was during this retracement as of lately, right? So, I mean, since about April, we've been in a little bit of consolidation, trying to push for higher highs, kind of failing. We had a bit of a triangle here. And then you'll notice right here in the most recent dump at the end of June, right? So we're talking about this area right here. Keep forgetting I can do, nope, didn't work. Yeah, so we're talking about this area right here. We had a head and shoulders type pattern that formed on lower time frames. And then on the daily, the HMA, look what happened, right? We got to this level, breakout level right here, and the HMA turned the bullish color. Look at the price action ever since the HMA turned the bullish color. Well, is that really a surprise? No, not really, right? We had the same thing happen here. We had a test of the 50. Once the HMA turned green, right? Even during this retest, stayed green, or AKA blue. And look at the price action, right? Price action switch colors again, tested the 50. Second, it got out of the 50. Look at the price action. And then we did that again most recently. So I love this 36 HMA. I really like it when it's paired with the 50 moving average on SPX specifically, just because it can cue you in on so much and the overlying trend that it just can't be ignored. It just can't. So this can be used as an entry and exit indicator. For entry, you know, things like, okay, above the 50, HMA green, I'm going for it. Below the 50, HMA, red, I guess we'll call it, even though it's purple, right? I'm gonna take a short position until the trend changes, right? So I love how it tells me when the trend is changing based on the color change of this moving average. I mean, it's too clean. It's too beautiful, and we can't ignore it any longer. So next up, we're going to talk about the 36 HMA using supply and demand and see if it does the same kind of thing. Okay, so when we're talking supply and demand, essentially what we're talking about here, support and resistance, aka levels of liquidity. Right, so let's see if this 36 HMA is really responsive to certain levels of, to potential supplier demand or liquidity. I could bring up my volume shelves here, but I really don't need to. I'm kind of tuned for, where volume is and could be, because your price action tells you everything. Right, so we can look at this kind of a move right here. Obviously, supply was up here at this 35.44 level on SPX. Only because, right, it had broken it as of recently. And you'll see here, every time it got to this level, rejection, got to that level again, rejection, finally got to that level. And what happened to the HMA this time versus the other two times? Well, as you can see, it stayed in your bullish color. And you really could have ridden this, for hundreds of points, just based on, a simple technical analysis of this whole moving average on a daily time frame. But you'll notice this not just happens on a daily time frame, because when you find relationships like this on big time frames like dailies, well, they tend to do the same thing in smaller time frames. So those that know me, you know that I play the 1 minute on SPX, and I let multiple things determine my entries and exits. But yeah, I play the 1 minute charts usually with this same concept of the 36 HMA and the 50 moving average. So let's go to a random day. Let's go to our most recent day. Why not? Okay, so right, you'll notice the beginning of the day, HMA, the moving averages always have to catch up throughout the day, depending on what they are. But there's always going to be a little bit of a lag or a catch up on them. But we'll see here that the HMA stayed bullish up until we got to our resistance around 43.34 on Friday. We did see a change in color on the whole moving average, but you'll notice paired with retracement, was it really that big of a of a scare, I guess we'll say, right? Let's look at this price action right here. So overnight, SPX gapped up in price action. right? We'll see that right here. Stayed bullish, and then turn, you know, the trend on the HMA changed. However, if we look from this price level right here, to this price level right here, right, the high of that breakout, we'll call it. And then we look at the amount of retracement. Are you really scared of that much retracement on a move that was over 30 points and it retraced $3? All right, so perspective is everything. And I think the HMA does a good job of just keeping you in perspective. Okay, the bulls changed the color of the trend, but they weren't able to retrace it really anywhere. All right, and then we got a break right here of this level. And you'll notice that HMA turned bullish, turned bearish for a second, and then buyers took control. And look what happened when buyers took control. Boom. Okay, now you'll notice here, right? We were in a breakout outside of this 36 HMA. And when we retrace back in, what do? We consolidated. Okay, so this is a really important point. Outside of the 36, you're in your breakout. Inside of the 36, the trend is in question. Outside of the 36, breakout. Inside of the 36, overlying trend is in question. Outside of the 36, breakout. Inside the 36 in question, right? So you see how this, I mean, it's just too clean, right? And being paired with supply and resistance levels, or sorry, supply and demand levels, support and resistance levels, you can see how the HMA really can help you, decipher what's happening in price action. And then you paired with another moving average. We don't take the crossover per se. However, we will, find a moving average that tells us who's in control of a given cycle. For me, that 50 moving average just does it. That 36 over the top is really just telling me, okay, who's making, who has the momentum, right? It's one thing to be in control. It's another thing to have momentum, right? Bears were in control under the 50 here. They had no momentum. Bulls were in control over the 50 here. 36 sold me. They had momentum. So as you'll see, this tool is great for entry and exit indicators, right? So you could do something like take trades outside of the 36, cut them when they travel into the 36. Outside of the 36, cut them when they travel into the 36. Works really well. And you can even see that on larger time frames. Let me go back to remind you, and let's just go to a 4-hour and see if we could do the same thing. Outside of the 36, take the trade till it moves back in. Outside of the 36, take the trade till it moves back in. Outside, take it till it moves back in. Each and every one of these would have still been profitable trades, whether you were trading shares, options, or really anything or any other equity, if this concept lies true. Which of course is on you to do some due diligence and make it truthful for yourself, right? Even on the 15-minute chart, look at the same kind of thing. HMA fired into bullishness, boom. When the price action came back into the 36, the trend was in question. Outside of the 36, it moved, questionable, moved, questionable, right? So it's really important to understand the overlying trend on a big level or big time frame. Nobody can say we are not bullish, right? Even with the 36 or the 50 moving average relationship, right? So I know the overlying trend, so I can apply the 36 to my trades. Okay, that's the key. Knowing the overlying trend, and then you're able to apply the 36 moving average to the trend or the trade in your direction. This also works with chart patterns as well. So let's just try and see if we can identify some chart patterns and see if this HMA is still as effective as it was, a little bit earlier. So let's just use this pattern right here. Right, so we'll see SPX on the daily had a double bottom. And you'll notice that it was a double bottom just by, seeing this high right here. It found found support at this level here. 2 times, right? Boom, 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 boom. Okay. Now, when it broke out of that double bottom, it started to flag right here. And it was really a bit of a ascending triangle move. Right. And here is our triangle. All right. Something like that. Right. And we'll notice that each time the HMA turned colors right here, it led to our double bottom. But when it broke out this time, right, like this time it traveled back to the 36. This time it traveled back to the 36. This time when it traveled back to the 36, it didn't break it. These 2 times it broke 36. This time it did not. Well, what did that tell us? That told us that we could be moving into a breakout. Let me see if I can find some more price action for you guys. Up, we had another one right here. We had a double bottom move. Let me bring this up for us. And this is as of, more recent price action. Double bottom move here. All right. So we see bullish action, price action came into 36. What happens when it comes in 36? We're talking about consolidation. Trend is in question. Turned bearish. What happened when it turned bearish? You had an early indication that price action was getting bearish, even in this divergence. And sure enough, went bearish, broke out of that double bottom, turned green, even with the red candles right here, still never changed color. I would have been able to hold, right? Even into this next price action right here. Price action crossed in the 36, broke the 36, right? Anytime it breaks the 36 indicator. And then, even on our supply and demand, we noticed the same kind of thing happening. We broke supply here. Price action turned bullish on the HMA, and we see the raids that ensued. This works as well, like I mentioned, with chart patterns. We saw a couple double bottoms just now, and it also can tell us where reversals might be real. So when you're looking at reversals, usually those are on lower time frames to try and get in early on reversals. So let's see if we had something that told us that price action might be reversing. So I went into on a 1 hour chart now on SPX, and let's look at what the HMA price action, paired with the 36 HMA paired with the 50 did. So you'll notice that we were, on a bullish trend. We had some glimpses that bears were coming in, maybe an early warning sign or something like that. And then finally, when we broke the 50 moving average, right, we crossed into the 36 and broke the 50 moving average. Look at the price action that ensued. Okay, and then we look at this point right here on the 1 hour chart. So we had massive bullish action. And then in that second hour, after that second hour, massive bullish action on this Monday, look what happened to your HMA. What color did it turn? It turned back bullish, right? We had some consolidation here. So maybe if I would have bought this rage, I'd have been in consolidation. I would have been able to look at my 1 hour chart, seeing that we were still bullish. And then we broke, right? And then, so I could have easily entered in this play right around here on maybe a 3-bar play or something like that. It probably would have been a 2 hour 3-bar play. Seeing that price action was retracing a little bit, we were in a channel. And then finally, when we broke, look at the HMA. It never changed color. All of the recent price action that this SPX has had hasn't, the 1 hour HMA has not changed color. And most of the time we were either outside of the HMA, very few candles inside. And even when we weren't retracing back to the 50. We were holding our ground. Right. So I love this whole moving average. This 36 HMA is just too clean. It's too clutch. I mean, if you're like me, like you, this kind of stuff really excites you because that means that, I have another edge in my repertoire. I have something that works on multiple different time frames. Look at the 4 hour chart. Right. Multiple different time frames, being able to deliver me like very clean cut price action, and following the price action really nicely. Even when the price action is away from it, the color change alone on this 36 HMA helps you identify what's really going on. And like I said, it's consistent on pretty much any time frame. You'll notice that, if it's bullish, we're outside the 36, we're on a breakout inside in question, breakout in question, breakout in question, breakout in question. I mean, it's too clean of a moving average. So I know I kind of flew through this, but I didn't want this video to be too long. I just really wanted you guys to start doing your own due diligence on this 36 whole moving average. See if it works for you. If it does, and you can reduce some of the noise in the markets and find another piece to your edge, by all means do that. But do remember that the whole moving average is not meant to be used alone. So pair it with some of your other edges, pair it with some of your other indicators, and see if it does for you what it's done for me, because we have seen some amazing gains just by using this HMA 36 paired with price action and different indicators. With that said, I appreciate you guys once again just tuning in for this algo talk. Hopefully that didn't bore you guys too much, but please respond in comments. I want to back test this as much as possible. This is kind of a newer strategy that we've been using for maybe a couple months now, but we felt that it was time to deliver this to the people. And, so give me feedback, good, bad, ugly, show me times it doesn't work. And let's chop this down and see if we can really get an edge on the market makers using this 36 HMA.